The International Monetary Fund has just released its October 2025 World Economic Outlook. And while the headlines might seem positive, with global growth revised upward to 3.2%, the reality is far more troubling. We're looking at what economists are calling better than feared, but worse than needed. And that should terrify you. If you're new here, we break down complex economic trends that shape our world. And if this analysis helps you understand what's happening in the global economy, make sure to hit that like button, share this video, and subscribe to Macro Decoded for more in-depth analysis. Let me paint you the picture with hard data. Global GDP growth for 2025 has been revised to 3.2%, up from the catastrophic 2.8% forecast we saw in April. But here's what they're not telling you in the mainstream media. Advanced economies, that's the United States, Europe, Japan, are barely growing at 1.6% this year, and it's getting worse in 2026. The Eurozone is practically stagnant at just 0.7% growth. That's recession territory, folks. But the real story isn't in the growth numbers. It's in what's driving them and what's about to hit us like a freight train. Picture this. In April 2025, President Trump's Liberation Day tariffs pushed effective U.S. tariff rates to 135% on Chinese goods. 135%. We haven't seen tariffs like this since the Great Depression. The economic carnage is already visible. U.S.-China bilateral trade collapsed by 12% in just the first 4 months of 2025. China's exports to America fell 25% year-over-year by September. And this is just the beginning. Here's what this means for ordinary Americans. The average U.S. household is paying $3,800 more per year because of these tariffs. For low-income families, that's $1,700 they can't afford. Apparel prices are up 17%. 500,000 Americans will lose their jobs by the end of this year because of these trade policies. But if you're finding this analysis valuable, please hit that subscribe button and ring the notification bell. We're one of the few channels giving you the unfiltered economic truth. Now, here's where it gets truly frightening. Global public debt is about to exceed 100% of global GDP by 2029. Let that sink in. That's the highest level since 1948, right after World War II. In the United States, something unprecedented just happened. Interest payments on the national debt now exceed military spending for the first time in American history. The IMF's Deputy Chief Geeta Gopinath warned us. It is worse than you think. They're calling it a fiscal financial doom loop. Here's how it works. High debt leads to rising interest rates. Higher rates mean bigger debt payments. Bigger debt payments worry markets. Market corrections trigger financial crises. And financial crises force governments to borrow even more money. It's the same pattern that destroyed Europe in 2010 to 2012. While oil prices have fallen to around $54 to $62 per barrel, this isn't the good news it seems. Falling energy prices often signal weak global demand, and that's exactly what we're seeing. Global inflation is still running at 4.2% in 2025, well above central bank targets. U.S. inflation is stuck around 3%, 50% higher than the Federal Reserve's target. And with tariffs just starting to hit consumer prices, this is about to get much worse. I know this is heavy stuff, but understanding these trends is crucial for protecting your financial future. If this analysis is helping you see the bigger picture, please give this video a like and share it with others who need to understand what's coming. Here's something the mainstream media won't tell you. We might be sitting on the biggest investment bubble since the dot-com crash. U.S. venture capital poured $161 billion into AI startups in 2025 alone. But here's the kicker. MIT studies show 95% of corporate AI trials report zero or minimal returns. Even Sam Altman, the CEO of OpenAI, admitted in August 2025, "Are we in a period where people are overly excited about AI? I think the answer is yes. When the guy leading the AI revolution is warning about a bubble, you should be worried." Meanwhile, business investment is collapsing under the weight of uncertainty. Over 30% of U.S. firms now rank trade and tariff policies as their top concern, triple what it was just 3 months ago. But even if we solve the trade wars and the debt crisis, we're facing a structural problem that will define the next century. The global population is aging at an unprecedented rate. The average age worldwide is projected to rise by 11 years between 2020 and 2100. In developed nations, the working age population is shrinking, while healthcare and pension costs explode. This isn't just an economic problem. It's an existential challenge to the growth model that has powered prosperity since World War II. Remember the supply chain chaos of 2020 to 2022? It never really ended. Climate change now causes 70% of weather-related supply chain risks. Cyber attacks on supply chains surged 431% between 2021 and 2023. And geopolitical tensions, from the Red Sea to Taiwan, are keeping global trade networks on edge. Companies are fundamentally redesigning how they operate. The just-in-time efficiency model is dead, replaced by expensive, just-in-case redundancy. That efficiency was one of the main drivers of the prosperity we've enjoyed for decades. Here's what IMF Managing Director Kristalina Georgieva actually said, and this is a direct quote. "Better than feared, but worse than needed. And uncertainty has continued to go up, up, up." The IMF identifies multiple scenarios that could trigger a global crisis. A full escalation of the US-China trade war. A financial market correction triggered by stretched valuations and impossible debt levels. The collapse of the AI investment bubble. Geopolitical shocks in the Middle East, Taiwan Strait, or Ukraine. Climate disasters disrupting global supply chains. And sovereign debt defaults cascading through vulnerable economies. Under their worst-case scenario, global growth could fall below 2%. Public debt could hit 123% of GDP by 2030, and unemployment could surge across all advanced economies. Let's talk about where the next crisis is most likely to start. In the United States, recession risk has jumped to 40%, up from 25% in the previous IMF forecast. The combination of tariff impacts, high interest rates, and consumer exhaustion is creating a perfect storm. China faces its own structural crisis. The real estate sector is still in shambles. The working age population is shrinking, and export dependence makes them vulnerable to any further trade disruptions. Europe is already in a growth recession, at just 0.7% expansion in 2025. High energy costs, fiscal constraints, and aging demographics have created a toxic combination that's grinding European prosperity to a halt. There is one piece of genuinely good news in this story. India has emerged as the standout performer, with growth revised upward to 6.6% in 2025. Strong domestic consumption, a resilient services sector, and smart economic policies have insulated India from many of the global headwinds. This is exactly the kind of analysis you'll only get here on Macro Decoded. We don't just report the numbers, we help you understand what they mean for the real world. If you're getting value from this deep dive, please subscribe and hit that notification bell. Behind all these statistics are real human consequences. American families choosing between paying 17% more for clothing or going without. 500,000 workers losing their jobs because of trade policies they didn't vote for. Retirees watching their savings erode as governments print money to service impossible debt burdens. This isn't just about economics. It's about the social fabric that holds our societies together. When prosperity disappears, political extremism flourishes. When trade breaks down, conflicts escalate. When debt becomes unsustainable, democracies struggle to function. So where does this leave us? The IMF is calling for immediate action on multiple fronts. Restore trade predictability, rebuild fiscal buffers, maintain price stability, and preserve financial stability. But honestly, looking at the current political landscape, how likely is any of that? The more probable scenario is that we muddle through 2025 with this fragile stability, setting up an even more dangerous crisis in 2026 or 2027. The temporary factors propping up growth now, front-loaded trade, delayed tariff impacts, unsustainable fiscal stimulus, they're all going to reverse. Here's what you need to understand as we head into this uncertain period. First, inflation is coming back. Central banks will be caught between fighting price pressures and supporting weak growth. Real interest rates could stay elevated longer than anyone expects. Second, trade relationships are being permanently rewired. Supply chains built over decades are being torn apart and rebuilt. The efficiency gains that powered globalization are being sacrificed for resilience. Third, government debt levels are reaching the point where fiscal crises become inevitable. When markets lose confidence, the adjustment will be sudden and severe. But here's the thing. Understanding these trends gives you a massive advantage. While others are caught off guard, you'll be prepared. The global economy in late 2025 is like a patient who looks healthy but has cancer spreading through their system. The IMF's upward revision to 3.2% growth is the equivalent of a temporary fever breaking. It feels good, but the underlying disease is still there. We are living through the end of the post-Cold War economic order. The era of free trade, low inflation, cheap money, and stable supply chains is over. What's coming next will test every assumption about how modern economies work. The question isn't whether we'll face another major economic crisis, it's when, and how bad it will be. And based on everything we've covered today, the answer should keep policymakers awake at night. But that's exactly why channels like Macro Decoded exist. We help you understand these complex trends so you can navigate what's coming. If this deep dive has given you insights you won't find anywhere else, please show your support by liking this video, sharing it with your network, and subscribing for more analysis that cuts through the noise. What do you think? Are we headed for another major economic crisis? Or will policymakers find a way to navigate these challenges? Let me know in the comments below. I read every single one and often respond. Thanks for watching Macro Decoded. I'm your host, reminding you to stay informed, stay curious, and stay ahead of the curve. Until next time, keep decoding the macro trends that shape our world.